Good morning, ladies and gentlemen. Today we're going to be doing our weekly requested ticker Friday, where we go over your requested tickers, give you the in-depth bull and bear case, along with going over the market at the end. So all the tickers will be timestamped down below like they always are, so you can feel free to skip to whatever section you want, or if you just want to skip to the market update, that will also be down in the section below. Now, if you have a ticker that you would like to request, throw it down in the comment section below. We'll make sure to get to it next week on V.R.T.F. So without further ado, let's dive into the video. So the first ticker we're going to cover is EAF, GrafTech International Ltd. So if we look at the chart on the daily, you basically are significantly below the 200 weekly moving average. You have been in a significant downtrend for a long period of time. You did break above the 200 daily moving average, but then on earnings basically gapped straight back down. You haven't actually filled this gap here. That's been around the moving averages now. So if you were to get back above this 200 daily moving average, I could actually see price appreciation trying to fill this gap here, even possibly getting above the 50 weekly, but really we're going to have to see how price comes with time. So for a short-term investment, the bull case is that you are forming a bottom. You have two hammer candles on the daily. You have candle number one, candle number two. So there's two bullish signs there. And you did have a gap down, but maintained the hammer pattern on the daily. So you are almost forming a bottom here. Now, the bottom needs to be confirmed. You need to start trading to the upside. You need to break this level of 493 and then fill the gap all the way to 511. I would like to see that be filled with force rather than just kind of slowly working your way through it. Price action, if this is truly bullish, is going to need to move through there very quickly. Then where would I expect to find my first resistance points? Probably 535, which was previous support, now is resistance, and then the 550 range for the stock. And that would also coincide with the 5.60 50 daily moving average. So we have to be on the lookout for that. Now, if I was looking to invest in this company long term, then I'd be definitely looking to get above the 50 weekly moving average as a first case that where I would tip my feet into the company. Now, if we fail to get above the 50 weekly moving average, then I would not be looking to invest in this company long term. It doesn't have possibly potential, but the thing is, because you sold off already so much, if we look at the long history of this company, second the 200 weekly moving average is printed, you've just been trading below it. You could be forming a bearish pennant right here, but it's really, really choppy, so I wouldn't classify that pattern as much. But just in this recent sell-off, you're basically from that to the lows, you're down 63%. From the birth of the company, I'm going to guess from all-time highs, you're down almost probably 98%. So if we go here, the bottom, that's 81%. So there's not a lot of incentive for this company to go higher. It could be a diamond in the rough, but my view on it is I would at minimum wait for it to get above the 50 weekly. And really I want it above that 200 weekly because you really have shown on this channel, when we do viewer requested ticker Fridays, we find companies that traded below the 200 weekly and then got it back above it. And it's a very easy expansion once you're above both, above the 50 weekly and the 200 weekly. It's easy to make money then. It just company expands. You have multi-decade expansions or multi-year expansions, and it's very easy to trade. So I do find some bearish intonations, or a lot of bearish intonations with the company, but I also see the bullish side that could be there for the short term. And as a short-term play, I could see that playing out. Long term, I would wait. Next, we're gonna dump into OGN. So now we're gonna go over Oregon and Company. So this is a recent IPO as well. Just looking, it doesn't have a 200 weekly moving average at all. And since open, it's basically been just making lower lows and lower highs. So you have a lower low, lower low, lower low. So that's number one, bearish. You're failing to make new highs, 1, 2, 3, lower highs. And you basically just had a mass waterfall depreciation in the stock's value. If we go from the upper range of $32.13 to here, you're looking at 34% haircut. So definitely very, very bearish. I don't see any bullish momentum in this company. You did have a green day, but because you had 1, 2, 3, 4, 5, 6, 7, 8 red days in a row, a green day is kind of bound to show up once in a while because there's always going to be those people trying to bottom tick and top tick. So in this case, they're trying to bottom tick, and usually the phrase is, oh, I bought the dip and the dip got dipper. So I do foresee this getting dippier. I don't see any positive correlation on the stock. You're below all the key moving averages and they're so far away from here. You would have to appreciate at least 21% from the downside, and if we go to the upside, that would be a 27% rally. So you would have to appreciate the price a lot to even get back up to where it'd be considered bullish. So long-term investing and short-term investing, I would not be looking into it. Even I wouldn't be looking for the swing trade. If you were trying to short the company, I could see that side, but I would wait for an exhaustion rally or relief rally of this, pushing up higher, kind of finding a point of rejection. First point of rejection, I would say 24, 26. Other than that, I do find better investments out there than trying to bottom tick or top tick a recent IPO, because the swings are very massive and there's also low volume because the company hasn't been trading very long. This company's been trading since June of 2021. So not a lot of shares out there, not a lot of reverse splits or splits to generate a lot of those shares, and previous price action to determine really any technical basis for it, and then fundamental, there's not just enough on the company. If it didn't have such an ugly chart, I may have some bullish intonations with it, but I'm just getting a very stay away signal from this company. And then if we jump over to Lux Algo to see what it's telling us on the daily, you've been smacking into this reversal zone and not finding any buyers. You're converging on the MACD, then diverging. RSI is significantly oversold, but you're not really showing any massive price appreciation there. And then if we look at the weekly, it's just a hot pile of garbage. So definitely stay away from this company. Next, we're going to go into VTRS. So looking at VTRS, Vitris Inc., you are below the 200 weekly moving average, so everyone knows my opinion on that. But however, not to beat a dead horse, you are showing some green after a mass sell-off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. That is extremely overextended. So this green day is bound to have a bounce, and I'm also seeing possibly a zone forming right here off previous action that you had earnings push up. So definitely possibly a price action zone there, so you could see some price appreciation. So if we just look at the short term, and this is going to be a short term play with high risk, guys. If you wanted to probably catch this company, the 38% retracement of $10.39 could be an interesting target. It is the convergence of several of the moving averages. I don't foresee you getting up all the way to 50%, but definitely that 38.2% retracement. And because it coincides with all the moving averages, I definitely could see a bounce there, maybe having some shorts squeezed out or possibly even closing out their position to take some risk off the table, along with if the markets basically rip up, which is my thesis for the short term on the market. I could see this company appreciating as well if the Russell, because most likely this company is in the Russell, I could see it appreciating in the short term. But now I can also see the bearish side. You have a recent sell-off. This could be a dead cat bounce. If you start breaking below $9.33, then next target $8.59. Afterwards, $8.57, and then $8.27. Now, once you break the lows of the $8.24, if we look at this on the longer term time frames, we could have set up an A to B, B to C pattern that completes down at the $5.99. So seeing how this company is extremely bearish and you maybe get that short-term bounce, you're below the 200 weekly moving average, I could see that $5.59 price point coming to fruition. But to confirm that, you would have to trade below $8.11. I could see that in the short term, but I could also see possibly a interim A to B pattern be formed, A to B, B to C. Let's say we come up to the $10.36 range, completing down at $7.30, and it's much simpler to complete this pattern just because you'd be having to come back below this recent low that you made. So short term, I could see a bounce in the company. However, it's a very high risk play to be investing in the company, especially because it's below its 200 weekly moving average, the 50 weekly, and the 200 daily. Now let's jump over to Lux Algo, see what it's telling. So kind of somewhat I suspected, we're in a price action zone. RSI is extremely oversold, but MACD is diverged from one another significantly. You could get a short-term bounce. However, I wouldn't expect that bounce maybe to even go to $9.83, especially because the trend strength is there, but you are in the reversal zone, so you're bound to have a bounce. I'm pretty sure you're bound to have a bounce, possibly up to the $10.42, which would coincide with the 50 weekly and the 200 daily moving average. Once you got that bounce, I'm pretty sure the MACD would converge and then diverge from one another. RSI would continue to be oversold. So I do see the short-term bounce possible play here, but I then would advise against long-term investing in this company. Next, we're going to go over CLSk. So looking at CLSk, it's so far away from its 200 weekly moving average that is just a very, very bearish company. It recently got rejected off its 200 daily moving average, which is the long-term price. So you have bearish here, bearish below the 200 weekly moving average. You are forming new all-time lows, possibly in recent history, where you form a new all-time low here at the $1.74 range. And if we go and take a look at how this company traded back in history, so you had the IPO, you had those big spikes, but I'm just going to take it from the recent times that it formed. You're down 95%. This is a company that's going bankrupt. I would not invest in it. You may have some bullish moves in it in the short term, but it's going to zero. I'm pretty confident of that. I could see you coming back up, getting rejected off the 50 daily moving average, and then heading lower, possibly setting up an A to B pattern, or you may even have it set up A to B, B to C, projecting down to 75 cents. Let's say we get rejected off the 50 daily, then we could be coming down to 94 cents. Regardless, it's just a very bearish intonation in the company. Now, if by some miracle you get above the 50 daily moving average, then I could see possibly some attack on this price action right here, probably coinciding with the resistance of the zone here, along with the 200-day moving average. Now let's hop over to LuxAlgo to see what it's telling us. You do have a price action zone sitting at the $1.95 and the $1.75. MACD is crossing over to the bullish side, so you could see some price appreciation, but your first resistance point is going to come in at $3.40 on it, and the support is going to be $1.95. With this reversal zone kind of coinciding here, I could see a short-term bounce there, bouncing back up, trying to tackle some of those 50 daily moving average, and then hitting back lower. So now, if you clear the $3.65, which we top of this zone, next resistance point would be $4.66. However, guys, I have to stress this, that this company has a very, very bearish intonation to it. I would not recommend investing in it, even in the short term, because of its low market value. I would not invest in it just because any company that trades sub $5 is very easy to manipulate through bid and ask. You have a lot of naked short selling. It's just very, very, very bearish. I do think at this time, if we're going to start a new uptrend in the market, a lot of tech companies are a way better investment. NASDAQ, S&P is just significantly better investment than companies like this. Now, that's not to say you can't make money off this company, but with the lack of liquidity and just overall volume, I would not recommend investing in the company. Next, we're going to go over into SIRI. So looking at SiriusXM holdings, this is just very bearish. You're nearly breaking below the COVID lows. You actually broke below the COVID lows of $3.83. If we look at where this leg started and where you're down, you're 41% down. I could see a dead cat bounce forming here, and you really don't see a volume capitulation because volume historically has not increased significantly. You just have dominant selling pressure where people are just dumping the company, and you have a dominant downtrend that you need to first break. So for the bullish side, you got to break this downtrend. Now, where I could see that downtrend being broken is start trading above $3.80. However, I do not suspect this downtrend is going to be broken. You're below all the moving average. You really don't have a lot of price action to support you, and you may be coming down into this region right here at the $3.47. However, once you start breaking below $3.50, then I'd be looking to this area of $2.98 as my next support. I really wouldn't recommend investing in a company that's fallen 44%, that has a share price of $3.61. Now, if it gets back above this 250 weekly moving average, then I could see maybe looking at the company, but you're below the 200 weekly, below the 200 daily, below the 50 weekly. You're so far extended from the 50 daily. It's just a very, very bearish intonation, and it wouldn't take much to start a volume capitulation rally in the company, possibly sending it all the way to zero. And you did have what appears to be a classic head and shoulders forming here. Price target on that was probably the $4.73 area, and now you're so far beyond that, it's just ridiculous. So to me, I can't give you the bull case because you have to get over that dominant downtrend. Until you get over that dominant downtrend, you're just going to keep going lower. And once you start cracking these lows and making lower lows and lower lows, with this downtrend, I want to see price create something more than just a downtrend for the bullish side. If you're going to go shorting this, just wait for the downtrend rejection and keep shorting it. Definitely something to be interested in for the shorts. And also, I wouldn't be surprised if this has naked short selling on it, or shares that technically don't exist are being shorted, but that's the system we live in. If we look at what LuxAlgo is telling us, you are approaching that zone around the $3.32. RSI is significantly oversold. You do have a divergence on the oscillation, so I could see maybe a curving up here, maybe appreciating up into the $4 price target, but I really wouldn't play this because of that dominant downtrend. If we look at the weekly, you're so far below the reversal zone. You are in a weekly demand zone sitting at that $3.43, and your RSI is significantly oversold. So I could see the appeal possibly of a interesting play here. I probably may even position very small and look for a rejection off this low here at about $3.40 with a very tight stop loss at about $3.20. So that would be approximately a 6% loss, but you could play the small loss to possibly have bigger upside depending on your risk appetite. But I'd definitely be looking for that $3.40 touch before I would even consider getting into the company. I think, to me, this looks more of a dead cat bounce. I would like to see the MACD kind of cross together on one another and try to converge, maybe get some tightening of the two together before I would necessarily get in. But overall, as an investment, long term, I wouldn't do it. I'd be doing maybe possibly the short term play with a very small fraction of my portfolio. I could see the appeal there. Next, we're going to go over WRK. So looking at WRK, West Rock Company, you do have another very bearish company. You're below the 200 weekly moving average. You're below all the moving averages, and I can clearly see an A to B pattern on the chart, A to B, B to C, projecting down to this $26 level. That's where I could see the company going, especially because you could be possibly flagging out here to make another leg lower. And then if you do have some price appreciation in the short term, for example, if we use the recent retracement leg down and use the projection up here, price target of $24.94. So definitely coming down to that $26-25 price target here. And if we look at the company's long-term price action, you do have a lot of price action forming in this zone here of the 26.48 to 25 area. That's a lot of the COVID volume that was on this company. So I could see an interesting bounce there, but you are below all the moving averages, having a significant sell-off and a lot of gaps. So what I could see happening on the company is you come back up to start filling some of these gaps. You have a gap here at $29.82 all the way to $20.20. Or you have a gap that you tried to fill today from 28.33 to now 28.05. So for short-term scalps, I could see this company as an interesting play. However, for long-term investments, I would basically stay away. You have a dominant downtrend, A to B pattern coming in at $26 for a target. So once that pattern completes, I would like to see more structure from the company before I could give you a bullish case to it. For a short case, basically on any bounce you short downwards. Next, we're going to go over VGR. Looking at VGR, this is a properly structured company. When I say that, you have all the moving averages in the proper area. You recently broke below the 50-200 weekly moving average and now have gone back above it. You guys see what my point is about the 200 weekly moving average. You break below it, you have a nice expansion. And now you're having your pullback because you did go on an epic run. You broke below the 50 daily moving average. So now where can we go from here? Well, if we just look at the chart, the obvious target would be in this area of the moving average at $10.83 and $10.69. However, based on this company being properly structured, let's take a look at what LuxAlgo is telling us for support and resistance. So now you are in a reversal zone here that you started to possibly bounce off of. Your MACD is starting to become constructive, but since it's very diverged from one another, you do have a hammer style candle on the daily, but you need to see confirmation along with volume increasing to push to the upside. Now, if we trade below the wick of $11.35, I'd be looking at this area of $10.93 as my target, and then also that would coincide with these moving averages. So definitely if you break below $11.33, I could see the stock going lower. So now And the upside potential, where could I see it going? Well, first target of air consolidation, I'd probably be looking at $12.61 because it was a previous support that you broke down below. Afterwards, the $13.19 area. However, I would like to see what MACD and RSI are doing once we start getting up to those prices. I could see some exhaustion up in the $13.22 level, but I definitely find the company an interesting buy at this point. However, I would have a tight stop loss at the bottom of the low. If it makes a new lower low, I'd be looking at the $10.95 to $10.85 as my secondary entrance. Next, we're going to take a look at JXN. So looking at JXN, which is Jackson Financial Inc., I do see an interesting pattern with the company. You are a recent IPO and you actually are trading above where you IPO'd at. So you're already props there. Now, why do I have to caution everyone with this? So IPOs, when they trade like this, you usually have some bullishness or bearishness to them as they originally start. But if you break below this 50 weekly moving average, basically that'd be my stop loss point. You break below that and close one candle below, that's when I'd be getting out of the company. You are very gappy on the chart, so you got a lot of these gaps in this area, so we have to pay attention to those. I don't necessarily like how it's trading just because it has so low liquidity that when you try buying this company, you're not necessarily going to get the best fill. If you come in with market orders, you're probably going to run the price up on yourself or have a big market move. So it's not the best way of investing. I would like to see maybe more people get into it. However, you are forming what could be an actionable bottom here. You did have this zone probably right here that you found a bottom. Let's take a look what Alex Algo is telling us to get a little more defined price action. So JXN is in a price action zone and it came near the price reversal zone. MACD is pinching together nearly, so I could see some more price appreciation. First target I'm going to say is the trend catcher at $39.22. Now, if we get above that, secondary target $40.72, and then my runner target up into this 42.46 price point. I also would like to see what MACD possibly tops out or starts curling down for my exit. Now, if I was to do long-term investing, this would be an interesting point for it, and then I would basically step my stop loss at this weekly moving average and 200 daily moving average. Breaking down below that, I would probably close out my position, but it is an interesting buying opportunity here. However, I would caution just to make sure you don't form head and shoulders, left shoulder, head, come back up, reject it off the 50, break down below, and keep going lower. So I want to see this 50 daily reclaimed very quickly when we get back up there. I don't necessarily want to see a rejection off of it. However, if you maintain the constructiveness of the chart, definitely something to be on the lookout for. And let's just quickly look at the weekly. So you do have a doji on the weekly. You did have a bearish cross on the MACD. However, you haven't actually crossed the zero line to be fully bearish. So doji just means indecision. If we close here, it could be a slam down, doji candle, reverse back up, which would be a failed breakdown necessarily, but we have to see you close back above 39.92 as the failed breakdown. However, you are showing constructiveness with the doji, so you want to see a price appreciating back upwards. You are in that zone, so it's a cautious investment, but I could see where someone could see value in this, and then you have your levels that you basically have to pay attention to be bullish or bearish on the company. Next, we're going to look at PAG. So looking at PAG, which is Penske Automotive Group, you did break below the 50 daily moving average, but you actually managed to reclaim it, filled the gap. So I could definitely see a price appreciation here. And I believe if we zoom out on the chart, this is new all-time highs on the company. It's just been on absolute tear since the bottom of COVID. So if we draw from the COVID lows to this long-term trend line, basically I would use this trend line as my long-term guidance of where you don't want to break, because that's going to be significant downside to the company. However, the company has very, very bullish tendencies. All the moving averages are in the correct order. You did find support on the 50 daily moving average because you were able to reclaim it. Now, we did have a lot of turmoil in the market, so I could see where it kind of found support here, broke down below, came back above, and also if we confirm this as an A to B pattern, it'd be B to C. This is now confirmed once it trades above 155.17. but that projects all the way up to $171.96. At this point, the company is a very interesting buying opportunity because you are near support. It's very easy to set your stop loss at $132.82, or if you want to be a little more risky, you could set it to not making a new low, which would be $128.26. I could see this run up, probably filling this next gap that's at the 140 to 141.61. Once I did that, I could see some price selling off in this area here where you had previous accumulation where you broke down. But if you manage to digest this area, you could break out and make new all-time highs through a blue sky breakout. And if we look at PAG on the daily, you are in a price target zone. You are kind of constructive on the MACD, but it is significantly diverged from one another. However, if you start appreciating to the upward side with the momentum that you have, I could see this MACD curling back towards one another and seeing a continuation. I would be cautious to see a MACD divergence where you're basically making higher highs with a lower MACD, but in the short term, I definitely could see the bullish potential in the company. And if it comes up, rejects off this region, comes back down, finds support and pushes up higher, that would be very, very constructive for the company. You are dipping into oversold territory on the RSI on the daily, so definitely you got a lot of things going for it. Now, if you break below the key level of $120.13, then I'd be looking all the way down at a buying opportunity at $113.56. But until that, I would not be bearish on the company. I'd be bullish on the company. I think it's in an excellent area as a buying opportunity, but making sure you have a tight stop loss. Excellent, excellent opportunity for the bullish run. I do see value in this company. So now let's take a look at our final stock for the day, URI. So looking at URI, you did have a mass sell-off recently, broke below the 50 daily moving average. You did actually find support on it where you bounced right here, but then gapped down, broke below it, failed to reclaim it, and are heading lower. You did fill this gap right here that you formed off the previous earnings. So kind of a very bearish intonation on the company in the short term. However, I do see this sell-off continuing until we get into this $356 or $359 area of the chart right here. But I could see some price appreciation from this zone possibly here. Let's jump over to LexAlgo to see where we could be going. So you're kind of in no man's land right now. You have a gap above, which you could try to fill to appreciate to the upside. However, I would like to see the company come back and retest this $350 region. RSI is oversold, but MACD is diverged from one another. That's why I'd be cautious right now to try to pick it up here, because you could have a potential for some more downside, approximately 11% downside. Now, if you miss the opportunity there, there's going to be other opportunities to come. Once the price shows more constructiveness, maybe that's when I would get in. I do see the possible getting in at the $402 region for this gap fill, and then having my stop loss basically at break even. That could be an interesting way to enter the company, because one, you take advantage of the gap fill, and then two, if you get stopped out, you get stopped out for break even, and then you're probably knowing that you're coming down to this 350 range. Now, if you don't get stopped out, you just keep moving your stop loss up and up as we try to tackle these upper regions. First resistance point $438, and then secondary resistance at the, I'm going to front run this zone to $471. Now, if this is a massive A to B pattern, then this would play out as follows: A to B leg, B to C, projecting up to $521, new blue sky breakout. So I could definitely see that happening. Let's jump over to the weekly just to see if there's any things we missed. So on the weekly, you are crossing pretty bearish. However, I have seen companies cross bearish, consolidate for a little bit, and then curl right back up. You're in a price target zone, but if you make a new lower low, then I'd definitely be looking more bearish side on the company. You did hit the reversal zone there, but I could see the case for the bullish side. That's what I was saying. The gap fill, play the gap fill. If you get stopped out, then coming down to this 350 region, which would be all the way down in this area here. Now, if you break through 350, then you're really coming down to this 270 area. But however, with all the market intonations, I don't necessarily see that happening. So I see the bullish side and I see the bear side. If you break that 380 area, then you could probably short it all the way down to this 355 area as a target. Definitely something to be on the lookout for. But however, MACD is so diverged from one another. If you break down here, I definitely could see a short-term reversal anytime on the way down, so it's not necessarily the best short trade. I would like to see a better short trade set up for that. Now, with that, we're going to dive into the quick and up market update. So if we look at the stock market today, we had a mass power up move, S&P powering up above its 2 moving averages. So where have we seen this before? On this big short squeeze right here. And also when we had this big move up, we started reclaiming these moving averages and just tearing through them. Now, this is why I say this is going to probably continue in a short squeeze going into Friday and possibly next week into Powell, and even a bigger short squeeze after if everyone dives into the market. You had so much bad news. You had Credit Suisse, the banks, the SVB, and you couldn't break this level. You couldn't break this 380 level. The bulls defended, they pushed up, got rejected with more Credit Suisse news. You had the ECB come out with 50 basis points. That's pretty terrifying. So are people kind of just getting numb to this point right here? However, now let's not get ahead of ourselves. You are at this upward trend line that you broke down below now as resistance. So if you look at the intraday price, you kind of rejected off this trend line twice, almost reject off here and secondary here. You know, no trend line's perfect, but if we start getting above this trend line and tackling that 397 area, then I definitely be looking more bullish side on the market. I really would love a retest of this 394.50 level. I'm going to front run at 394.60 and to possibly pick up the S&P and some of the bank stocks at that point, just because they've been so crushed, and also maybe tech. But I'm definitely looking at more bullish side in the market. I'd be a cautious bull until Wednesday, to where I hear Powell come out. I want to see what the summary of economic projections are, but I definitely could be nibbling at the market. I could definitely see a nice short squeeze igniting, possibly even taking out this 50 daily moving average at the 400 area here, which also was a big pivot point back in history. So I would not be surprised if we get a nice push up to 400. And I would love to see the market open up at 394 tomorrow. That would be roughly down, I want to say 50.5%. And if we jump over to the volume profiles just to see if that's a possibility, do we have anything sitting in that region? So we did close very close to the POC and the upper value. So we would have to actually come down all the way to about 1% to 391. So I'd definitely be looking for that retest of the 50 weekly moving average as a sharp bound point. I really don't want to see a lot of price breaking down below it. So if we take a look at the NASDAQ to see where its value area is, so if it comes down 1%, again, I don't think that's going to happen. So that theory is kind of invalidated for that volume profile rotation. But if we start opening up at 0.5 below, which is not crazy for the market, you know, gap downs are for buying. I'd definitely be buying this gap for the short term and to Powell, because I could see a big short squeeze rally coming up and then have a tight stop loss at the 393 level. NASDAQ has just been an absolute tank. I said I did not expect to get back up to these levels, but NASDAQ could actually take out this 309, 310 level tomorrow. We have the possibility. You have the short there. They haven't relinquished. You have increasing green volume. If we look at the volume, it's dominantly green on the day, and you have a crossing of the short-term and long-term price coming in. I definitely would like to see a pullback to possibly the 303.93 level on the NASDAQ, which was your previous resistance point that you just blew past today. So definitely areas that I'd be interested in, and I'd be definitely cautious. So once we clear the Powell meeting on Wednesday and we're still trending upwards, I'd definitely be looking at being a little more heavy bullish in the market, because then the tone would have been set. Now, this could be a blow-off rally, but there's a lot of bear fuel still here. And if we start swinging past this point of the 310, 312 level, NASDAQ is going to tear these bears a new one. I was a bear. I've been in short squeezes. They're not fun. Know when you're wrong, know when you're right. Right now, the market is on an absolute tear. The bears are the fuel, and the bulls do not care about bad news. It's going to take a significant amount of bad news, probably a 50 basis point from Powell, and a higher terminal rate to send us lower. If they get 25 with the same terminal rate, I could see this going significantly higher. And with S&P, the key level to watch tomorrow is going to be this 50 daily moving average. And with that, guys, I'm going to conclude the video. If you want our more deeper thoughts, please stay tuned for tomorrow's weekend deep dive where we go into the market. We'll have the Friday close, kind of determine where we're going to be going in for Powell, giving you the key levels. If you followed our last week in deep dive, we called out this level of 308.64 and we missed it by 1 cent. So definitely sharp points on that. We called the XLF bottom, and we're also calling for this possible short squeeze on the Credit Suisse video from yesterday. So go check that out. Link down in the description below, and it'll be at the end of this video possibly. So 2 videos queued up for you guys to take a look at. So I hope you have a wonderful Friday. Have a great weekend. I hope to see you in the weekend deep dive. And if it's not too much trouble, like the video if you liked, and hit the subscribe button if you want to stay tuned, along with the bell notification so you can know when our videos go live. And with that, I wish you a great day and happy Friday.